ladies and gentlemen, Kagan here. Welcome to the market update, and I hope you guys had a good week trading this week. Hope you guys are enjoying your weekend. Thank you for your patience. I had one of my best friends visiting here in Minneapolis, visiting me here, and so I was taking him out yesterday, and so I was not able to produce video. Did have a late night, and that I took pretty much whole day kind of resting, rejuvenating, so I can come to you guys with a video. It's actually evening time on Saturday, so once I'm done with the video and publish it, it's gonna be a little bit, but I'm sure you guys don't mind. So today, let's talk about, we'll do Spider, Qs, and IWM, and we'll call it a day. Let's gonna follow up with what we've been talking about on the last weekend's video, or last weekend's market update video, right? There are levels, and I did analyze the market in a longer term implication and the trend validations, and we did all of that last week's market update video. So I'll put that video out when this ends. If there's a little menu thing comes up, I put that up there if you haven't watched it, or just to refresh your memory again, because it is important that for us to understand where the market is going in the long term, because market is going to have shenanigans like this. I mean, 10% decline is not abnormal. You're gonna see stuff like this happening, but it happened very, very fast, and market could recover just as fast. You know that. So, and a lot of questions that I get is, well, how do you stay calm during the market volatility? How are you to have that composure? Well, because I always understand the long-term implication and understand the long-term trend's health. You know what I mean? And so, you know, I don't do anything short-term. So something like this is not gonna make me scared of the market. What I'm gonna be scared about is if the market gets into a bear market, if we start to see a signal of crash, though there's always somebody somewhere shouting that the crash is gonna happen every single day, every single month. As of today, there's no signal of actually market crashing. There's no evidence of that. We're just seeing this steep, abrupt decline to shake a lot of people out. And this is the market's job, guys. I mean, what do you expect when you come to the stock market? Do you really think it's going to be a cakewalk? Do you really think that they're going to give you this red carpet and you're going to come in all flashy, you know what I mean, all looking good? It's going to get ugly. You're not going to see, you know, we're not growing savings account here. If you cannot able to deal with this volatility, you're not going to survive in this market. You shouldn't even be trading in the market if you cannot deal with this kind of volatility, if you cannot able to control your emotions. Simply, you're not made for this. If you don't have a stomach for this kind of volatility, you're not made for this. And if you're expecting to avoid every single volatility and you want to grow your money just perfectly, always going up, you're living in a fantasy world. I'm telling you. So toughen up, grow some balls, and if you want to do this successfully, then you do have to train your mind so you can strengthen your mental capability, your fortitude, your volition, your willpower, you see. And you know, so one thing, I'm going to do a little bit of rant here, but one thing that really, really bothers me the most, one of the comments that most traders do make is this. Okay, what if this time is different? What if this time is different, okay? It's gonna be different this time. Really? Do you live your life like that? Seriously, when you get in your car and drive to work, do you tell yourself, well, this time is gonna be different, I'm gonna get in a car accident? Do you do that to yourself? When you board airplane, do you tell yourself that, well, this time is going to be different, even though you haven't got an accident, or you haven't, you know what I mean? You had maybe no accident last 10, 15 years in your driving record. Maybe you don't even have any speeding ticket, but are you going to tell yourself that, well, this time is going to be different? You get in an airplane, you're like, well, this time is going to be different, so it's going to crash and I'm going to die. Do you tell yourself that? Why is it traders, when they come into the stock market every freaking day, they're always worrying about crash? It's gonna be different this time, okay? It's gonna be different, right? So this is a chart. Whoops, this is a chart that let me find it for you guys. Bear with me. That I tweeted out. Which chart? What? There you go. Right here. Right. This chart right here. Right. This chart right here. Tweeted it out a couple days ago. It was trading at 265. That's what we call rising pivot. Right. This is a very rudimentary, and when it comes to charting skills or strategy, right? It is basically saying the prior resistance becomes new support, like, you know, basic charting technique, right? You can see the red arrows represents prior resistance, prior peaks, and then blue arrows represent potential supports, obviously. And this is one of the main reasons, one of the reasons why I was actually bullish back in early 2016. And there are other reasons, but this was another chart they were looking at back then. And not only that, not to mention, I mean, just if you just, you know, just do this, right? You just do that. I mean, you can see it just was hitting that perfectly as well. And in the market where you get shenanigans and traps and all that, this one just played out perfectly. And that a lot of times that's a luxury in the market where things play out perfectly. Well, it did here, even though everybody was calling for a crash back in 2016. So you put this concept right here, you can see that prior resistance new support, put that just right back here. And nobody said this to me, nobody tweeted out or nobody emailed it to me that this time is going to be different, but I can tell, I can hear, right? There's somebody somewhere looking at this one and say, well, okay, well, this time's going to be different, right? This time is different. And if you're that person, I'm going to ask you, when you get in your car tonight, you're going to ask yourself, this time is going to be different, and you're going to get in a car accident, right? None of us live like that. Maybe some of you guys, I don't know, but none of us live like that, right? By looking at your driving record, let's say you haven't had any, you know, accident I haven't had any accident in the last 15 years maybe. So I have a really, really good driving record. So I can see that because I have a good trend validations, my trend is healthy in my driving record assessment, right? So I can say that, you know what? I want to continue to give benefit of the doubt that I'm not going to get in any accident. You know, it doesn't mean it's not going to happen. Nothing is guaranteed in the market, obviously, but I want to give benefit of doubt that I won't. And I'm confident that I won't. And it's kind of like that. You know, you're not going to start telling yourself that this time is going to be different and start expecting the worst. But you want to give benefit of the doubt when we're seeing certain levels do hold, right? And you can see that just in a few days, we did see that gap up, which we're going to talk about. Another thing that I've been talking a lot about back in 2016. If you go look, if you watch my video, 5 reasons why stock market crashed not in 2016, I think the video that I've done back in mid 2016, right? Somewhere here. I guess I'll put that video as well. I'll put that video, 5 reasons why stock market crashed not, or stock market is not going to crash, or something like that. In that video, you know, I talk a lot about how trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And what I was saying was, it was very, very simple that we got that, right? Support. Again, this is a rudimentary stuff. This is as basic as it's gonna get. As basic as it's gonna get. I mean, this is the first thing you're gonna learn when you start learning about technical analysis, right? Everybody knows this, right? Connect your dots. Higher lows, right? Everybody was freaking out in 2016. A lot of times market doesn't even give us this kind of luxury where things, you know, where it just perfectly respects these levels. And what I was saying on that video, I said multiple times, Not just on that video, but market update videos. And you can, again, go back. If you're skeptical, well, I don't know if you really said that, okay? Go back, my YouTube channel, go through all of my market update videos, what I was saying in 2016. Just go through all of them. See if what I was saying is legit, that I'm not bullshitting you guys, right? What I was saying, or the Dow theory, right? Charles Dow, right? Back in 1900s, he said this: trend is assumed to be in effect until it gives us a clear signal that it has been reversed. You guys remember this? If you guys have been following me since then, you probably hear me saying this over and over again. The trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Reversed. So tell me, do we have a clear signal that it has been reversed? And it's easy to say now because the market is up here now, right? But even, okay, let's make it more realistic here. Let's do that right there. Oh my God, okay. Oh my God, okay. Oh my God, that's left shoulder. Oh my God, that's right shoulder. Oh my God, this thing. Oh my God, we got a global crisis, okay? We're gonna have a financial market meltdown globally. All the billionaires, okay? You think you're better than a billionaires? This is an actual comment, guys. Actual comment. You think you're better than the billionaires, okay? They all saying the crash is gonna happen, okay? I simply connected the dot and I simply understood one of the Dow theories, and I said trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And I don't know for sure if it's going to or not, but I want to give benefit of the doubt because as of today, we do, or at this time back in 2016, we don't have clear signal that it has been reversed. Do we? No. Not yet anyway. So I want to give benefit of the doubt. The trend is assumed to be in effect, meaning to be valid, right? Valid. But I know just somebody somewhere, some bozo out there is going to be like, well, Case, this time's different. This time's going to be different, okay? Yeah, we held it here, we held it there, yeah, man, but this time it's a different animal, okay? You know what happened to those people? Those people are kicking themselves because they live their life telling themselves this time is different. Probably same people who says that probably says the same thing in their life. Every little thing happens, they'll be like, oh my God, this time's different. And now we got this. So you're gonna tell me this time is different? Or are you going to say, you know what? Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We don't have a clear signal. We didn't have a clear signal here. We didn't have a clear signal here. We didn't have a clear signal there. We didn't have a clear signal here. We didn't have a clear signal there. We didn't have a clear... We had some maybe evidences of a sharp declines, yes. Some volatility, yes. But we didn't have a clear signal that it has been reversed. So that means I want to give benefit of the doubt to the buyers in the long term. Trend is assumed to be in effect, is valid as of today. That means it has a higher probability of this thing bouncing back up. And a lot of times when you do see a very, very quick decline like this, you're gonna see a you could see a very quick reverse. The market could potentially, I tweeted out a couple days ago or maybe a week ago, I'm not sure when, market could potentially reverse, recover all of its losses maybe in 2-3 months, maybe even sooner. So here, let's look at what happened this week though, right? Now that we understand, now that we got that out of the way, right? You're watching my video, if you've been following me, and if you feel that you've been learning from me, then you understand that we're not gonna start saying that this time is different because only stupid people say that, right? So we're not gonna say that. So we wanna look at this more objectively, and we wanna look at this and say, you know what? The trend is technically still valid as we're still in the vicinity of higher lows, right? And we saw a gap up. So let's analyze these candles here, we did have a little bit of a bullish Harami or tweezer type of candle pattern there, right? This we talked about last week. We did talk about that high wave doji or high wave spinning top. We did see a gap up, but we quickly filled. We came down. You see, what's funny about it is if I draw this trend line right here, you can just go drawing it like this. You can see this at the during the day, right? During the midday, how this thing came all the way down, breaking below the trend line, trapping people. You know what? Let's annotate that because there are a lot of people probably doubling down on their short or something like that, or a lot of people are getting stopped out here. And then we saw that green candle, right? And then we gapped up, we held it, we saw some volatility a little bit. Next day, we also held that gap. We're holding this gap 3 days. The good thing about gaps though, it gives you double support. We give you the gap area as a support, and a lot of times when gap gets filled, also the area gap becomes a support. So that's why, you know, I do track gaps, and we've been tracking gaps all year long. So if we, but the better thing, if the buyers really want to sustain this minor term buying pressure to continue, it would be better to have this keep this gap sustained, open, not filled. So let's see how it plays out. Let's see if this week bulls can able to sustain this. If they can do that, I think there's a good chance we kind of fizzle a little bit, but gap back up to maybe 280. Maybe a pullback a little bit. If it's in a perfect world, maybe we throw a little bit of inverted head and shoulders, and then goes for the new all-time high. New all-time high, right? So we do have a weekly. When we go to weekly though, let's look at this here. When we do have a weekly, we do have bullish Harami candle there. Bullish Harami with the long lower wick here. So let's see if we get any kind of confirmation on that. We may follow up next week and see how that played out. Let's see if you can hold this level here. If it doesn't, if we come down and feel it, it's not the end of the world, but when the gap does get filled, it does act as support, then we likely see a bounce here. So we'll go from there. Let's go to Qs. Qs, you can see I drew a support level here. And there's a gap right there. So let's do a few lines here, and there, and there, right? So you can see drawing this support, we kind of overshot it, got below it, trapped a lot of people. Let's tighten it a little bit like that. Maybe that was a shenanigan, right? A lot of longs getting stopped out, a lot of shorts flipping, a lot of longs maybe even shorting, flipping back bearish. There's a little tiny gap here. So same scenario, right? We are holding that gap. Let's see if we can hold that gap. The gap hasn't been filled. Gap has not been filled. You know, I want to give you guys a little bonus analysis here. We do have bullish divergence, not just on the Qs, on every single indices. Lower low, higher low. You can go ahead and check it. Every single indices we have on the Dow, you have on the S&P. We also have on the Russell, I believe. Let's continue on here. So it looks like we're holding that gap. Let's see if we can continue to hold that gap. Russell 2000, we also got this gap here. Let's just make this gap here like this, because we got tiny gap here, and then we got another gap from Thursday morning. So I want to make it like that. And then maybe bring this up like this, right? And prior resistance, new support, prior resistance, new support, and the support there. Put that up here. And that's the next swing high right here, right? So I mean, again, there's a lot of levels to overcome. We got all these moving averages declining, but we did see this abrupt sell-off. But like I said, there's no, as far as the long-term trend is concerned, there's no downtrend. We don't have we don't have a bear market. You see what I'm saying? I go to monthly here. I mean, what does this look like to you? Does it look like, remember we just been reciting it. The trend is assumed to be in effect until it gives us a clear signal that it has been reversed. I was saying the same thing right here in 2016. This is the reason why I was buying this dip. Not just on the Russell 2000, but every single indices. Not just on every single indices, but I was accumulating shares in multiple stocks. It was just very basic technical analysis. Now we got this. Do we have a downtrend? Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Do we have any clear signal that it has been reversed? Somebody's going to say, well, this time is different, okay? This time is different. And then they're going to, be very not happy later. But the gap is still open here. So let's see if we can get something going here. So I think, overall, I think there's a good constructive move that we're seeing in the minor term. Let's see if we can see if buyers can push a little bit more and maybe have some of those bullish divergence to confirm and maybe have some of these gaps to be sustained. And if we can do that, I think we can get to 280s real quick here on the S&P. And we'll follow up again next week. We'll go from there, right? You guys enjoy the rest of your weekend. And good luck trading next week.